Hello and welcome in this tutorial on how to use the healthcare business financial model template. This specific template has been designed for a dentist clinic, but you can adapt it and you can use it to any healthcare related business. So from general practitioner doctor to a physiotherapy clinic. So let's start. The first tab that you will see is the color coding tab, which will give you an overview of the types of color codes that you will see in the model. So you can see that we have input cells, which are yellow with blue font and dotted border. Those are the cells that you can modify in order to adapt the model to your specific business. Then you might encounter hard-coded cells, not in this specific model, output cells, which are the result of a formula, link cells, which are cells linking to another cell, and then not applicable cells. Not applicable cells are cells where the model is telling you no need to change the values in here because the model will ignore them. As we will see the model, when you go through the input cells, the model will adapt as you tailor your model towards a specific scenario, the one for your specific business. Some cells might not be applicable anymore, and so the model will tell you no need to fill those in, you can ignore those. The next tab is the table of content tab. In this tab, you can see an overview of what you can expect within each of the tabs down here. So as you can see, we have the inputs tab where all the assumptions are made and where you can fine tune the model to your specific needs. Dashboards tab with numbers, charts, and both, as we will see later. So we have a dashboard for numbers only, charts only, and charts and number together. Then financial statements, where you will find the three pro forma financial statements, profit and loss statement, balance sheet, and cash flow statement for a period of 5 years or 60 months. A valuation tab, where we project the present value of your business based on the inputs that you have inserted in the input tab. And then the calculations tab, where all the calculations is made regarding revenue, cost of goods sold, expenses, full-time employees or hiring plan, capital expenditure, and debt. So let's start. The first tab is the input tab. As you will see, each tab is divided into sections, and in order to expand a section, you just need to click on the plus button here. So the general information section allows you to insert the name of your clinic, when the financial plan should start, when the fiscal year ends, the name of your, when you actually start operating. So let's assume your clinic is called doctor clinic, let's say. So the model will adapt, okay, doctor clinic opening, when does the date of when doctor clinic opens and becomes operative. So in this case, April, and currency, let's say dollars. Then next section, cash starting balance and the corporate tax rate. Then in the quantity section, you can select how many days you are open per week, of course, from 1 to 7. The seasonality allows you to check whether certain months you might remain closed, so you just select close, or if you remain open, and then select how many customers per day you have. Maybe in summer you expect to have more customers, so you can set it in to include some seasonality. And then daily customers growth rate per year, so how much these daily customers should grow every year. So in January of the first year when you start, you have 15, and then if you select 10%, for example, you're saying that 1 year from now, in January next year, you expect to have 15 plus 10%. So on average, 16.5 customers. Next section is the revenue tab, where you can select the different types of revenues, so the revenues categories like consultation, therapy, treatment, product, and then the individual revenue items. So in the category here, you have a drop-down that is directly related to the categories that you insert here. So in this case, we have consultation, therapy, treatment, and product. If you add something here, test, in the drop-down, we will also have the test one. And then you can add, for example, generic consultation, specialist consultation, rehabilitation plan, whatever, with their sales price, the growth per annum, so how much this amount grows every year, and then the sales mix. So the percentage of your clients that purchase one thing or the other. This might even be higher than 100% if you believe that your customers might purchase more than one item in this list. So for example, your clients might purchase a generic consultation and then also some additional therapeutic products from you. And so if you add more than 100%, that is possible if you believe that your customers might purchase more than one of those items. Then you can select the average cost. So in this case, those are all consultations and treatment plans. So you might not have material costs of goods sold. So you just select 0 from those. While for the product, you have a certain markup of $30, and so your costs are 90. And then how much you expect them to grow per year. And of course, the items that you will find here are those that you have inserted here, right? So if here we insert test item from the test category, then it will appear here as well, and we can add those here. Let's remove it for now. Then you also can insert the recurring expenses. Again, you will have categories that will populate the drop down of the category. The category is important because we structure the financial statements according to these categories. So the items, cost items, revenue items are grouped in the financial statement, according to these categories. So you select a category and then an expense, the specific expense item. You can select the start date. So when this recurring expense starts, the calculation, whether you want to calculate it as a share of sales. So in this case, you add share of revenues, or as a fixed amount. And in this case, you add fixed amount and how much this amount grows per year. As you can see here, we have not applicable cells because as I was saying earlier, if you select, for example, fixed amount, the model will tell you, okay, then no need to fill share of revenues. While if you do share of sales, then of course you need to select share of revenues and no need to fill in the fixed amount and expense growth per year. Then you might also have one-time expenses, like for example, website building or store renovation or whatever. You select the category, when you incur in that expense, and the expense amount. Then hiring plan, again, you can select the departments and then the role, like medical assistant, secretary, admin assistant, the salary, when they start. If you plan a certain end date in their hiring, then you can select it here. Otherwise, just leave it empty if you plan to hire them indefinitely. And then employment taxation and salary increase per year. Then moving down, we have the capital expenditure. So if you need to purchase some equipment or whatever, you can add it here with the purchase date, the amount that you spend, and the useful lifetime of that equipment, so the depreciation schedule. This is helpful because we will use this to distribute this expense across, in this case, 15 years, if you expect your equipment to last 15 years. And then the balance sheet, where you can select if you have inventory or accounts receivable, the share of revenues for inventories and accounts receivable, and accounts payable, you can control it via selecting a share of cost of goods sold. And then in case you plan to have an investor, then you can select it here together with the investment date, so that we can account for this money that you receive, and also for bank loan, so the borrowed amount, the remaining months when you issue the debt, the debt repayment start date, and the interest. In case you already have an outstanding debt when you are compiling this model, then just insert the outstanding amount of your loan, and for debt issuance date and debt repayment start date, add the financial plan start date, so the same date when the financial model starts. Then moving on the dashboard tab, as we can see here, we have 3 tabs: numbers, charts, and charts and number. For the numbers, as you can see, across several metrics that we have selected, you can see the results of your model. So for example, total customers, average sale price, number of daily customers, revenue, gross profit, head count, and so on. We can see the same metrics, but with the charts, and then both, so charts and numbers. And in the third tab here, you can see not only a yearly breakdown, but also clicking on the small plus here, you can see a monthly breakdown. So year by year, you can see how a certain metric evolves over time. Then we have the financial statements with the profit and loss, and then revenue, of course, gross profit, EBITDA, grouped by the expense categories, earning before taxes, net income, and so on, and also the revenues grouped by the categories that we have selected in the input tab, then the balance sheet with the total assets and total liabilities and equity, and then the cash flow statement with operating cash flow, investing cash flow, and financing cash flow. Then we have the valuation tab, where based on certain assumptions that you can insert, we have a resulting weighted average cost of capital. Then we calculate the free cash flow, we discount it with the weighted average cost of capital, and we get to have an implied valuation today of your business, and also certain multiples based on revenue, EBITDA, and EBIT. And then we have all the calculations tab. As mentioned earlier, in the calculations tab, you can see for each metric, so revenue, cost of goods sold, expense, hiring plan, and so on, all the metrics, the sub-metrics that contribute to revenues. So in this case, we can see the average number of daily customers, the number of sales, the average sales price, and the overall revenues for cost of goods sold. We can also see by category and the specific item, the cost of goods sold, and the same then for recurring expenses, full-time employees, with salaries by department, number of employees, with CapEx. You can see the depreciation schedule, and with the debt. So with the debt issuance, well, let's go on the total debt issuance, that balance, the debt balance at the beginning of the period, the debt, and then the debt balance at the end of the period with the interest expense.